Hi there, it's Michael Bovee with ConsumerRecoveryNetwork.com. Thanks for coming to our DebtBytes YouTube channel. We put together video series about your different debt relief options that are designed to be informative and helpful in helping you understand what your options are, how they're going to work given your set of circumstances. Today I want to start our credit counseling video series by answering the question, what is credit counseling? How does credit counseling work? Credit counseling services have been available to Americans for decades. Typically, a credit counselor is going to provide a free consultation, and they're going to discuss with you your budget, your cash flow, and your ability to meet your necessities, your monthly obligations, power, rent, mortgage, car, gas, things like that. And then come up with a plan to pay off your unsecured creditors, medical bills, credit card debts, things like that. One of the main tools that they have to get your payments lowered is interest rate concessions that are prearranged. There's no real negotiation that goes on. They have relationships and communication ongoing with most of your creditors. And because of that, they can come up with an estimate, one phone call. If you're prepared with all the information that you need about your debts, your obligations, your creditors, and your income. In one call, they can usually come up with a proposal that they'll be able to submit to your creditors, and if they all agree, then put you on what they call a debt management plan. That debt management plan has many benefits. One is you're only going to pay a certain amount every month. It's set. It's not going to fluctuate. That amount is going to be lower than what you're paying now because of those interest rate concessions. So, let's assume that you're paying on average across your credit cards 20% interest. On average, credit counseling services get that reduced to 8%. So that's where the payment break comes. And you're going to be able to apply or amortize the payoff amount on all your debts over what's generally a 4 to 5 year period, working with the credit counseling agency. It's a very non-confrontational approach to having a debt payoff plan. The debt management plan gives you a predictable amount of money that you have to come up with every month within your budget, and it gives you a predictable timeline to get out of debt. It doesn't have a lot of impact on your credit score, but it impairs your ability to get credit while you're on one. You're on one for 4 or 5 years, so you've got a kind of a gap in your credit history unless you've got a mortgage and car that you're making payments on while you're in one of these things. So you're not having new credit or using new credit. So yeah, it has a marginal effect on your ability to get new credit, but you bounce back from a credit counseling services program credit-wise really quickly once you complete one. When it comes to credit counseling services or agencies, most of them are nonprofit. There's about 300 of them around the country. I particularly prefer one over all of them. Even though they all pretty much offer the same service and go about those payment reductions in the same way and have the same relationships with your creditors, there's one that stands out above the rest, and here's why. Cambridge Credit Counseling in Massachusetts is a national credit counseling organization. They are the only one that publishes their success data, their customer satisfaction, how many people complete their programs, how much on average the debt is reduced by, and then they update it quarterly. No other credit counseling agency in the nation, to my knowledge, publishes that data and updates it on a regular basis. So for that reason, I have identified them as a go-to resource for you to reach out and consult with for free. You just pick up the phone. You can reach Cambridge at 888-948-4425, and that's 888-948-4425, or you can visit them on the web at cambridge-credit.org. One of the reasons that credit counseling is as successful as it is because you're going to have to qualify. So when you talk with a credit counseling agency, Cambridge or any other one, you're going to have to fit a certain kind of criteria. And that means that you, one, can afford even the reduced payment. If your budget and your cash flow and your income suggest that you can't, a credit counselor should probably not enroll you in one. You also can't make too much money. So in other words, your banks, your creditors, are only going to agree to reduce your interest rate and put you on one of these special payment plans when they can see that it's the only way you're going to succeed. To close off this video, I want to prepare you for what kind of criteria, just from a money perspective on a monthly basis, you need to be prepared to meet if you enroll in a credit counseling service. In general, you're going to have to come up with roughly 2% of your combined balances that are enrolled in the plan. So, for example, you've got 5 credit card accounts and it all totals $20,000. 2% of that is $400. So your first payment to the credit counseling agency, second, third, all the way through to your 50th or 60th payment, 4 or 5 years down the line, would be set at, in this example, $400. If you can afford 2% of your combined unsecured debts, credit cards, medical bills, and the like, you definitely should reach out to a credit counseling agency and talk with them about your options to get enrolled in their program and pay off your debt. So that concludes our first video in the credit counseling series on our DebtBytes video channel. Thanks for tuning in.